please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
A very good morning. Welcome to Chartbusters. Well, it's a Friday morning. It's a bit of a challenge really for the bulls today. The bears are on top. The Asian markets are under pressure. Overnight cues as well weren't great. And in fact, as we speak, the Nifty continues to trade below the 10,000 odd mark. Well, Mangalam, second half of trade is going to be very, very challenging. It's the end of the week. It's the end of, near the end of the fiscal year and also the end of a series. So I don't know what, can really bring the bulls up and try to fight back from this mark of sub 10,000 odd.
Absolutely. But Nigel, what really can bring the bulls up? The one thing that I'm looking at really is the 10,000 put. Yeah. Even in the first hour of trade, where we made a low of close to 99.60 on the Nifty, this is the expiry week. The 10,000 put still has the maximum open interest. Bulls are not scared yet, mind you, because we're down, 126 points on the Nifty, and we've just seen covering of close to 2.1 lakh shares out there. So that is something I'll be watching out for all through today's trading session. For the advanced decline ratio, we started with 26 stocks in the red for 1 in the green. The red and green lines, yesterday, they were perilously close to each other. Now they're too far apart, maybe fighting for the weekend, perhaps.
Mangalam, I'm going to be looking at those lines very, very closely because yesterday they kept kissing each other and moving away. Today, they're fighting, they're away. Right. But let's see before the weekend whether or not they can get closer. That's going to be important because at the start of trade, there were only 50 stocks that were advancing. Now there are 162. So at least they're getting a little closer to each other. Maybe make up before the weekend. Let's see. The bulls would love that. But we'll have to wait and watch.
I don't know whether it's the bulls and bears you're talking about or your own life right now, Nigel, but I'm a little embarrassed looking at those lines and the kissing talks that you're doing ahead of the weekend. First up, let's take it straight to the headlines. Then in that case, global jitters weigh on the markets as trade wars begin with the US President Donald Trump imposing about $60 billion in import tariffs on China. Nifty slips below the 10,000 mark for the first time since October 12, 2017.
And the mid-caps, they take a bigger knock compared to the frontline indices. The BSE small cap index, that's down more than 300 points. The Nifty Bank as well is seeing a cut of close to 450 points.
The Asian markets trade sharply lower on the back of escalating trade tensions. China retaliates to sanctions by the US President Donald Trump. Dow futures down over 150 points and Nikkei down almost 1,000 points.
All right, let's get a quick technical check then on the markets. Ashwani Gujral joins in. Well, Ashwani, what do you do? It's a little confusing if you're a bull or a bear because I don't know whether you can short the markets at these levels. And the bulls will be wondering whether or not the correction is over, at least for the near term. Can we get a bit of a bounce from here? Your take, Ashwani.
See, it's important to understand that the overall downtrend continues. Now, what's happened today in the morning is that you have a market which is basically bombed out. Asian markets lower, Dow futures lower, your market breadth is totally collapsed. Now in this kind of a scenario where everybody is bearish, to take a short position now and hope that it will work, I don't think makes a lot of sense. The position that may work is that you have a call position or a buy position and hope that somehow Dow futures recover or there are some positive statements or Europe does not show the kind of negativity, and then people who are right now short get trapped and the market has a second half recovery which does not change anything, but just that from this bombed out zone you basically recover say half of the losses. So that's the view I am taking. It's a high risk view, but I don't think this is the time to get short, at least on a intraday basis. As far as individual stocks are concerned, Motherson is trading close to the high point of the day. That's a buy with a stop of 304, target of 321. I would think at some point, banks may recover. So HDFC Bank, you can buy with a stop of 1830, target of 1875. And JSPL, you can sell with a stop of 219. Target of 205.
Well, Ashwani, you're making a valid point there, in terms of playing for a bit of a bounce. At least the screen, if you take a look at the Asian markets, we're doing a relative outperformance. But in terms of that view that you're taking, the brave view that you're talking about, buying the Nifty at these levels, the important part is going to be where do you put your stop loss? 9950 or something? Should that be the level?
I would think today's low is a decent stop on the Nifty, and the chances are one that will hold. The IT index is already in the positive, so a lot of IT stocks can be bought like Mindtree, Tech Mahindra, Infosys, etc. So there is, the money is made when you move contrary to where the majority opinion is, at least on an intraday basis. So Jubilant Food, Titan, these stocks are moving up, and if you get a bit of help from global factors, you'll see, a fairly strong barrage of short covering.
Right, Ashwani, you make a valid point about the IT stocks as well. Just take a look at Infosys and both Tech Mahindra. Both of them recovered about 2.5 to 3% from the low point of the day. Infosys actually is at the high point of the day, taking the IT index higher. So we'll keep an eye out on that. Thank you so much, Ashwani, for joining in. We'll keep coming back to you today, albeit a little more frequently than we usually do. But taking the market point forward, Nigel, just a month and a half ago, Jan 29th, is where we were roaring as far as our markets are concerned. We were at record highs. So from those levels itself, if you take a look at both the Nifty and the Sensex, we've corrected, around 11%. The Nifty mid-caps and banks have been bigger casualties, down 15%. If you take a look at the context in which we came, in 2017, the BSE listed market cap added close to 45 lakh shares, 45 lakh crore in terms of overall market cap. Since Jan 29th, we've given up almost a third of that. And the last time we speak about the 10,000 mark, virtually unchanged, just about 1.3 lakh. That's as far as the markets are concerned. But individual stocks, there'd be a lot of casualties.
Absolutely, Mangala. When you're talking about the market cap change from January 29th, I'll tell you what, a few days before that, it hit the peak market capitalization that we've ever seen. So from there, in fact, the market capitalization lost is around 17 to around 18 lakh crore, from earlier in January till date. But, if you take a look at the 10,000 mark, we are back there. October 2017, we were at those levels. I think October 11th was the last time we closed below the 10,000 odd mark. But sectors, they've done their own thing. The IT stocks have been outperformers. The pharma stocks have been relative underperformers. Gone are the days when you should have the striker, non-striker, the defensives. Here they're going opposite direction. So though the Nifty is back at those levels, these indices, they have just done their own thing. And if if pharma stocks are down, then Lupin will be losing out. So Lupin's lost more than 28%. You have Auto Pharma as well, that's taken a bit of a hit in there. And even some of those OMCs, they in fact have lost more than 20%. Tata Motors as well is struggling. But if IT stocks are doing well, then Infosys should have done well. Tech Mahindra should have done well, and that's precisely what's happened. They have given you good returns, and L&T over there, that as well is batting, because when the Nifty is flat and L&T gives you returns of more than 10%, you will be rather happy. And Maruti Suzuki, we know about the waiting time if you want to buy a Maruti vehicle. Well, in fact, that as well has done a relative outperformance up close to around 10%. But if you're looking, at the broader markets, that's quite interesting, because you have couple of stocks over there that have given you more than 50% returns. Mindtree and KPIT, both of them are up between 50 to around 70%. Take a look at NIT Tech as well. That's in there with a gain of around 50%. And Mangalam, you've been telling us about the pizzas. Jubilant Food Works in there with a half a century return. 50% return is what you're saying. And TV18 broadcast, well, standard disclosure, owner and producer of the channel that you're watching. So just keep an eye on that one. That's giving returns of around 56%. But if you're looking at underperforming sectors, you'll say, oh no, metals underperformed. Oh no, pharma stocks underperformed. Well, if you got your stock right, you would still make money. Biocon and JSPL, they're part of the relative underperforming sectors, but they're still giving you money of around 40 to around 50%. But it's really been that sort of a market. If you're just comparing it with October 2017 itself, when we were at around 10,000, if you got the stock wrong, it's a real pity. Balrampur Chini, Reliance Naval, your BML, Shrey Infra, MCX, all of them, they're giving you cuts of around 35 to around 45%. Short point, we're back at around at that 10,000 mark for the first time since October 2017. But stocks, they're doing their own trick.
Absolutely, Nigel. I was looking at the last plate where you said if you got the stock wrong, there's a real pity. And perhaps my sense is that a lot of people might have got it wrong, given the sort of rally that we saw on the likes of Balrampur Chini, Reliance Naval, BML. Last year, we saw all these high beta names doing really well. So I just fear that maybe a lot of people might have been stuck on the wrong side out there. But we'll keep an eye out on the markets. Talking about the global markets, that has been really the leader on the downside. We spoke to a lot of global voices as we slip into a short break. Take a listen in to what their view on the global trade and growth going forward is.
Well, we think that these measures are actually less aggressive than what we feared, and I think markets feared at that point of time a few days back. There has been a reversal of some of the measures which were taken earlier, so that's positive. Clearly, the levying of tariff on Chinese goods imports is negative, But it looks like to us, while they announced this statement, the U.S. administration official did also mention that we're in the middle of a big negotiation with China. So it's unclear to us at this point of time whether this is a move by the U.S. to then eventually negotiate with China as well, just as they have actually reversed some of the tariff on steel and aluminum, or it's actually going to go further deteriorate from here. At this point of time, we think it is more likely to have a moderate impact on trade and growth.
It does appear to me that it's a negotiating tactic ahead of negotiations with China, all aimed at extracting a better deal from China in terms of the treatment of US intellectual property. It's not in Donald Trump's interest to end up with a trade war, because a trade war would mean higher consumer prices in the US, big impact on US exporters like Jack Daniels and Harley-Davidson motorcycles, all of which would work against his base, his supporters in the upcoming midterm election. So I think he wants to extract a deal. He doesn't want to cause damage to US exports.
The announcement today vis-a-vis China, first of all, we're not going to know the products for 15 days. Second of all, there will be an appeals process. There will be an opportunity to negotiate between the U.S. and China. So we don't really know yet exactly how bad this is going to be. The second question, of course, is what is going to be the retaliation? What is the response of other countries? And is that process going to spiral out of control? Look, there's no question this is risky, but in many ways, Trump, his bark has been worse than his bite, and we've seen that again in the announcement today.
This is Chartbusters. Nothing incremental to say about the markets. We're still down, but one stock that really stands out right now is M&M. That stock is closing in towards the higher end of today's trading session. They had announced a joint venture with Ford to perhaps produce good SUVs. Let's see whether they do go ahead and produce good cars and people like them. But as of now, the stock is up, outperforming in an otherwise weak market. It's Friday, Nigel. Let's talk about movies. The stock on our radar right now is Inox Leisure. We have the weekend to look forward to. Let's welcome Alok Tandon, the CEO of Inox Leisure. Thanks a lot, Mr. Tandon, for joining in and perhaps giving us some reason to cheer this Friday, apart from, in the markets that are so weak right now. Before we do that, just a view on the insignia theatres that you have. How many do you have as of now? And what are the sort of occupancies that you see in those theatres?
Hi, good morning, and thank you for having me on the show. Inox today is changing the way people watch movies. We don't want people just to watch a movie, but to live a movie. And this is how Insignia came into being. We at Insignia want people to have the best of the best, whether it's a projection, whether it's sound, whether it's food, whatever it is. We want people... Hello?
How many of Insignia theatres are there right now?
Okay, today we have 9 screens which are absolutely high-end Insignia theatres.
Okay.
And what our endeavor is to take this to other parts of the country also.
Okay. All right. Mr. Tandon, if you could give us a sense of, what's been the response out there. You're going to be giving the best of facilities, the best of food, etc. So the cost as well, right? That comes at a cost. What is the occupancies there? What's been the response? And from 9, what are you looking at? I mean, in terms of taking that number 2?
Oh, well, people are really loving it. Yeah. There have been times when the entire auditoriums have been booked by our patrons. They are enjoying the movie watching experience. They are loving the food, which has been curated by Vicky Ratnani, because these are 3 legs to Insignia properties. It's luxury, it's technology, and it's service. Going to the smallest of things like uniforms, they have been crafted by Arjun Khanna.
Right, you spoke about Mr. Tandon,
much higher than our national average.
Right, Mr. Tandon, you're speaking about, good food being curated, the uniforms, etc. So are higher realizations of tickets being offset by lower occupancies and higher expenses? Is that a drag on your operational performance is what we're trying to get at?
Not at all. Occupancies are high, and I just said that the occupancies are much higher than a national average occupancies. The realization of tickets is higher. People want to watch a movie in an insignia screen, so there's no drag at all. In fact, there's a lot of demand for our insignia screens where these theaters are, and also there are other cities where people want to have an insignia screen in their city, and we are doing that currently as we speak. We are expanding our insignia label and signature to other parts of the country also.
So in your overall scheme of things, Mr. Tandon, if you could tell us how much does insignia and other premium offerings account for in your overall revenue, and how is that trend likely to pan out going forward?
Well, I will not be able to share those minute numbers with you, but I would like to say that the EBITDA is quite high for these properties. The EBITDA margins are very high. And after making these insignia properties for the last, I would say, a year and a half, we feel it's the right approach which we are taking in the company and ensuring that more insignias come up.
All right, talking about the right approach really has been your ad revenue growth. I'll just request my producer to pull up that chart for our viewers. You've done very, very well in terms of ad revenue growth. I'm comparing it with your peer like a PVR, and the ad revenue growth that should come up on the screen has looked very good. Can we expect this sort of a growth rate, sir? What has changed so much? The kind of focus you're putting on ad revenue growth, the kind of numbers you've delivered in the last few quarters. Give us some clarity there.
Oh, well, there's a lot of push towards ad revenues and other operating revenues. We are pressing the pedal hard. We are ensuring that there are lots of feet on the street. We are going to various offices, making cold calls, having national tie-ups, looking at mega blockbusters and blockbusters so that people can come and advertise their AVs on a screen. So a lot of effort is there. And I hope that we continue with this trend. Though I'm not a crystal ball gazer, but I know that this is something which we are focusing on, and we will ensure that our ads keep on increasing quarter on quarter.
At a 25-30% growth, you've been doing 30 to 50%. I mean, maybe it's on a low base, but can we work with an ad revenue growth of 25% plus? Is that a number you'd like to work with, sir?
Well, the endeavor is surely there.
Okay.
Again, I'm saying that I'm not talking numbers, I'm not talking future percentages, but I'm saying that there's a clear focus in the company. We have to ensure that the ads keep on increasing, and the entire team is working towards it.
All right.
All right. Thanks a lot for the experience, the movie experience that you've given us on screen right now. Mr. Tandon, thank you. Nigel, you want to add something?
No, I am wondering whether you're going to be going and catching a movie this evening on one of those good screens.
I can't afford them. It's 1,000 rupees a ticket, but let's see how that goes.
It's a good experience.
It's a good experience. We'll keep an eye out on that. But with that, we'll slip into a short break. We told you first, and now it's official. Tata Steel today has said that it has been identified as the successful resolution applicant for Bhushan Steel. We'll get you all the details on the other side. Stay tuned to Chartbusters.
We told you first, and now it's official. Tata Steel today has been identified as a successful resolution applicant for Bhushan Steel by a committee of creditors. That meeting was held yesterday. The deal, though, is subject to approvals from various parties like the NCLT as well as the Competition Commission of India. Ritu Singh, remember, she broke that story first here on CNBC TV18. She joins in with more details. Ritu, fill us in.
That's right, Nigel. Tata Steel has confirmed that it has been identified as the successful resolution applicant for acquiring Bhushan Steel. Now, the package offered by Tata Steel to take over Bhushan Steel, which of course is still subject to various approvals, is this, what we understand from bankers is an overall package of 43,000 odd crores has been offered to the lenders of Bhushan Steel. This includes a payment of over 35,000 crore rupees to just the financial creditors and about 1,200 crore rupees to the operational creditors of Bhushan Steel. In addition, banks will also be given a 12% equity in the company. That, of course, is something that banks can look forward to, an upside. If the company is indeed able to turn around, that is something that banks will still hold. There will also be some amount of capital infusion into Bhushan Steel as part of the offer. roughly this amounts to about 77% of the principal outstanding debt of Bhushan Steel. That will be taken care of with this offer. Remember, the total financial creditors' claims against Bhushan Steel that have been collected by the IRP so far is over 56,000 crore rupees. So this offer entails a minimal haircut of just over 20% for the bankers.
All right, Ritu, thanks a lot for that. With that, we've run out of time on Chartbusters. Stay tuned to CNBC TV18 because the Nifty closing in on that 10,000 mark as we speak. Thank you for watching.